Hey guys, what's up? How's it going? Robin here. Welcome to today's video. And in today's video, I'm going to be doing a deep dive analysis and update of my total stock portfolio for the month of August. Alright, so before we get into the video, I just want to say really quickly, guys, I'm sorry I haven't been publishing too many videos for the past couple days. I wanted to take a little bit of time off, but in today's video, I'm going to be doing a quick little recap here, and there's lots to talk about since there's been a lot going on with the stock market over the past couple days. So in this video, I'm going to be covering my 3 portfolios that I have. We'll go over my Wealthsimple Invest portfolio first, which is my biggest portfolio. Then we'll jump into my 2 Wealthsimple Trade portfolios, which are my dividend-based portfolio and my Reit-based portfolio. So I'm going to be doing basically a big deep dive analysis, and today's video is going to be a little bit on the long side, but I'm going to be showing you guys everything that I have and doing like a complete stock portfolio reveal in this video. And of course, if you guys want to see my other updates that I've done in the past, check out a link in the description of this video. That'll go to my previous monthly updates that I do. I generally do an update about once a month, so check that out if you guys want. And of course, if you guys are brand new to the channel, and if you guys do enjoy this video, be sure to give it a big thumbs up and subscribe to that. And subscribe to the channel if you guys want to see more Canadian stock market investing based videos. Alright, so let's jump into my Wealthsimple Invest portfolio and let's see how my stocks are doing with my Wealthsimple robo-advisor. Alright everybody, what's up? How's it going? Well, inside my Wealthsimple Invest portfolio, and I'm going to talk about this portfolio really quickly. We'll go over this one first, and then like I said, we'll go over my other portfolios a little bit later on in this video. But let's just talk about this one really quickly, and I'll give you guys a quick little recap on how I made this portfolio, how long I've been investing with it. And I started this portfolio in about March 2019. Was around the time I got serious with the portfolio, and you can see here in this little graph here, like it was about March 18th, actually the beginning of March, I started to put some good chunks of money inside this portfolio, and that's when I got super serious with investing, and that was about a year ago. So basically a year from, I guess, the 2020 stock market crash is when I first started investing. So this portfolio has been, I guess, around for a little bit over a year now. It's been a little bit of time past a year, like maybe like 3 or 4 months or so, as it is September 4th right now, the time of recording this video. But this is the very first portfolio I ever made. This is one I wanted to get serious with investing and saving money and all that kind of stuff. And before I really knew anything about the stock markets or investing or buying stocks, and even to this day, I still think that, you know, using a robo-advisor is a great way to do it, as you guys will see. But this is like the first portfolio I ever kind of built. It's also my biggest portfolio. Like the bulk of my money is inside this portfolio. As you guys can see, I've managed to accumulate about $49,000 inside this portfolio, and as of right now, we're sitting at returns of about 2,206. Now the funny thing about this is, over the past couple days, the stock market has seen a bit of a dip. You know, there's a lot of people posting on YouTube right now, freaking out kind of thing. You'll probably see on the news and whatnot. Who knows what's really going to happen, but for the most part, we've seen a little bit of a dip. To give you guys a little bit of context, about a day or two ago, I was sitting at about $3,000-ish or so in returns, and now we're sitting at about 2,206. So a little bit of a dip the past couple days, but that's okay, because I actually see this as a great opportunity to buy more stocks and get more growth going in the future. So I actually hope the market dips, because that means I can buy more stocks at a cheaper price, and then over time when it grows, we'll just get a bigger return. So that's the approach I've always had. And I'll show you guys over time kind of like how this portfolio has grown and stuff like that, and I'll also show you guys the earnings. And just so you guys know, as of right now, that $2,207, I'll do a quick little return check here to see how much it is in returns, and that is about 3.9%, just under 4% in total returns for this portfolio over the course of about a little bit over a year. So not too shabby. All things considered, we had a major stock market crash at the beginning of this year, but over the crash, since it happened, I've just been investing on a regular basis, and I've always kind of had that approach to just keep putting money in the market on a regular basis. And if you do that over time, your highs will be really, really high, and your lows won't really be that bad. We're doing pretty good this year. I can't really complain, even though stocks are like tanked really hard, and on paper everything looked like it went down quite a bit. Our stock's doing pretty good, just because we regularly put money in on a regular basis, and I don't care if the market's down, I don't care if it's up, I'm just going to keep putting money in, because that's how you grow your money. So this is the risk level 10 when it comes to Wealthsimple portfolios. We picked level growth number 10, which is, I guess, has the most equities, so that's the most into stocks, and it's about 90% equities, which are ETFs, and I'll show you guys those in a second, and about 10% bonds. And if you guys want to set up for a Wealthsimple account, I'll put a link in the description of the video. There'll be one for Wealthsimple Trade and Wealthsimple Invest. If you guys want to use Wealthsimple Invest robo-advisor to build a portfolio, I think if you make a deposit of $500, you get $50 for free. So consider using that link if you guys want to sign up. Otherwise, you guys can. I'll also put a link to my Wealthsimple Trade and you guys can start up a Wealthsimple trade portfolio, and I think you get $10. So it's up to you guys how you guys want to do it, but I'll put those 2 links in there, and I'll talk about the Wealthsimple trade one later on. But here's the ETFs that I actually have inside this portfolio, and here's the cool thing about this is you're really going to see in this video really quickly, like what stocks have really performed really well and which ones are kind of lagging behind, and which ones I'll give you my predictions on which ones are going to do well going into the future. So the first ETF here we have is one of my favorite ETFs and also one of my best performing ETFs, of course, and this is my US Equities Etf Vti. Now I did a video about VTI a little while back, just kind of explaining it, talking about it, looking at past performance, looking at some of the stocks and whatnot, and I think it's one of the best US based ETFs to hold long term. It's just, it continues to grow over time, and it's also like the best performing ETF. It's also the one I have the most inside this portfolio. This is what Wealthsimple has chosen for me. So we have a market value of about $11,000 in VTI, which accumulates to about 50 shares. So it is a pretty expensive ETF. I think the price right now is somewhere in the hundreds or so for one share, and our performance right now is 13.2%. Which is pretty solid. If you look at VTI over the course of this year, I think it's sitting a little bit in the negatives, but because we've been regularly investing on a regular basis throughout last year and throughout the market crash, and we just had money, this has allowed us to actually have a 13.2% return, which is pretty sweet. You look at most stocks right now, and they're, especially some of these other ETFs, where they're all in the negative, and then you have VTI, US stocks, which are just 13.2%. So they're doing really good right now. It's hard to say in the future if they're going to keep going up. They might go down a little bit towards the end of the year. If the market is going to start going down over the next couple of days, they'll probably get pulled down with it, but we'll just have to wait and see. But I think US stocks like VTI or any of those solid Vanguard stocks, like they're just good ETFs to hold in your portfolio. And I think any solid portfolio for long-term growth should have a good chunk of it in US stocks, even in like a tax-free savings account or something, because the growth is just so huge. And remember that stock appreciation is 100% tax-free. So in the end, it does make a big difference, right? And if you do the math on this 13% would be about a little over $1,000. So most of my return is actually right now coming from VTI. So pretty interesting. Next up we have is XEF. XEF is a foreign-based ETF. It's got a bunch of stocks all over the place. This is another one big one that Wealthsimple chooses to invest into. It's also my second most weighted one, coming in at 21%. So this is mostly just for diversification purposes. And this is $10,847 with 365 shares and currently sitting at negative 1.3%. XEF took a big dive, obviously, when everything did, when the market crashed earlier this year, and it's kind of been hovering around zero. I've seen it peak up a little bit to like maybe 1%, but you can see it right now it's kind of going down a bit. The next one we have here that took a really big hit was EEMV, and this one has not really recovered that much. When the stock market did crash and everything happened to begin this year with, all that world stuff that went on, they did take a big, probably one of the biggest nosedives, because I remember them sitting at like 8 to 10% negative. So they did recover a bit, obviously, and obviously if they do finish off the year with like a 2 or 3%, that's not too bad. But you know what? This one is probably going to take some time to recover. It could be a couple years. It's probably going to be a while. So although you could invest into it right now, and it might be a wise choice if it does recover. The only question is nobody really knows when. So I think it is a nice ETF to maybe have in your portfolio, but I wouldn't go too crazy with it. And Wealthsimple kind of has it sitting at 15% here. So we have $8,000 in EEMV, 113 shares with a negative 3.8%. I don't know how I feel about this ETF going in the future. We'll have to just wait and see. But you never know. Like next year, maybe EEMV has like a crazy rebound year and they get like a 20 or 30% return, and it just pretty much offsets all the damage that we've had this year. That's probably what's going to happen, or at least at some point in time it's going to happen. And that's kind of what happens when this happens in the stock market. So honestly, guys, if you just keep investing and make the, kind of follow some basic strategy, having US stocks, maybe some foreign stocks, and then a little bit of whatever you want to cherry pick, that's probably the best way to do it, and you're going to get a good result. Next up we have here is our good old-fashioned Canadian XIC. This is the main ETF that Wealthsimple uses for Canadian stocks. We are seeing about just under $6,000 here, and we have 220 shares of this ETF, and we're about 2.1%. Canadian stocks have actually recovered quite a bit. And they've actually, in the past month or two, they've actually kind of a little bit of recovery. If you guys, when I go over my dividend portfolio, I guess you won't be able to see it now because, they've had a bit of a dip over the past couple of days. But our portfolio was kind of starting to rise, and we're starting to get those earnings going up because my dividend portfolio is predominantly Canadian stocks. Same with my Reit portfolio, is all Canadian stocks. So you'll see that more later on in the video, how specifically Canadian stocks are doing. But they're not doing too bad. You know, in the grand scheme of things, they recovered quite a bit. We were just kind of buying it over the course of the year, and they've done pretty good. And I think over time, we'll have to wait and see how XIC does, but it is one of the better Canadian ETFs, and I like to hold. It's about they have about 11.5%. So I like how they have that like small percentage, right? And then next we have this global equities ETF, which is just a little bit of everything once again, and you can see that overall, you know, it's down quite a bit, sitting at about negative 1.6% with 45 shares. And then the very last one we have is the US equities. So you could slap another 6% onto the 23 we have, so that's about 30% US equities, which is pretty good. Ideally, I'd like Wealthsimple to have a little bit more than that, but you know, at the end of the day, it's okay. I'm not going to complain too much. It's pretty solid. And this is VUS, which is the Canadian Hedge Fund, and it's up actually quite a bit at 14.8%. So they're doing pretty good too, just like the VTI one, doing pretty well. And we have 46 shares, just under $3,000. And then at the bottom here, we have our fixed income, which is 10% of our portfolio. And we have ZFL, which is government bonds, and then QTIP, which is a Canadian hedged US based bonds. And you guys can see here that we don't have a ton of money in them. We have lots of shares because they're cheaply priced, but there's not a lot of money in their end. It's about $3,686. And then QTIP has about $1,254. And the performance has been not too shabby, you know, 10%, 10.8%, 7.9%. And then we have some cash at the bottom here that Wealthsimple was. They kind of have like a cash buffer. You need to put a certain amount in and then they'll start spending, but it seems like they always keep a little bit of cash on hand. I'm not too sure why they do that, if it's just to wait for more better times to invest into. I'm not too sure. But I've always noticed they kind of keep a little bit of money in your portfolio kind of thing. But yeah, that's the entire portfolio, guys. Obviously, US stocks are doing the best overall. You can see that in action. Like, the proof is right there. US stocks and equities are vastly outperforming the market overall. But the market overall as a whole is still down, and we're probably going to expect to see it go down in the next little while. But like I said, if you're smart with your picks and stuff like that, even in a bad market like we're going through right now, you can still have a good decent return. And this is why you diversify, because if US stocks might have a really good year this year, but maybe next year they have a crappy year, and then maybe your international equities kind of pick it up. So that's the whole point of diversifying. So you're just kind of safe overall. So that's this portfolio, guys. Let me guys know what you think in the comment section. If you guys have any questions about Wealthsimple Invest or building a portfolio with them, just let me know in the comment section, and we'll go over to the activity tab and we'll take a peek at the dividends. There isn't too many dividends in this portfolio, but when we go to my dividend-based portfolio in Wealthsimple Trade, you guys will see that there is lots of dividends in that portfolio. So as of September, we've only got one dividend, $7.65 from ZFL, and that's pretty much it for this portfolio. So once again, let me know what you guys think in the comments section. We're going to jump over to Wealthsimple Trade, and I'll show you guys my dividend-based portfolio from there. So before we jump into the Wealthsimple Trade portfolio, I just want to show you guys this spreadsheet really quickly. This is the spreadsheet that I track my dividend portfolio. If you guys are familiar with my channel, I've basically been building this dividend-based portfolio since the start of this year, and I've been posting updates almost on a weekly basis. So if you guys want to watch those updates, once again, there's a link in the description video. You guys can watch how I completely built this dividend-based portfolio. And I wanted to build this dividend-based portfolio so I could, you know, get more passive income rolling in. That was the purpose of this portfolio, and I like to track things. I like to be really analytical, and I like to track things and show you guys and be like really transparent about everything and show you guys like the value of, like, if you're good with your money and you invest in the stocks, you can really grow some nice passive income streams. So I'm just going to show you guys this really quickly so you guys can get like a nice little idea of how the portfolio is done. But you know, when we first started this portfolio, we made about, you know, we were making about a couple bucks a month kind of thing. Then we went up to $4, $5, $7. And then in June, on month 6 of investing in the portfolio, we got our first $13 month. And then July was about $13 again. And then in August, we had got about almost $12. And then going to September, pretty much all of our stocks have a quarterly dividend or monthly dividend in September. So September, we should see some nice little earnings. And that should rise to maybe to be about $15 to $20. We'll have to wait and see. I haven't actually punched in the numbers yet for September. So I'll do that in the next dividend investing update video I do. But I just want to show you guys this really quickly. And in total, we made about $57 in dividends from this portfolio, and this is my dividend-based portfolio. So I just want to show you guys that to kind of inspire you guys and show you guys how, like, if you guys keep at it, you know, your dividends do grow over time. And the whole point of this portfolio was for me to kind of track that and show you guys that if you just keep investing, you know, your money will grow over time. And hopefully this kind of like spreadsheet kind of inspires you guys. So let's jump into this portfolio and let's see how our dividend-based portfolio is doing. So I'm using an emulator to capture the screen so I can show you guys my Wealthsimple Trade account, because you guys are probably familiar with Wealthsimple Trade. It is a mobile app, but I'm using a emulator on my PC to basically run the app on my PC, and then I'm capturing the screen to show you guys so you guys can kind of see the app a little bit better. I don't know if this is the best way to do this, but this is the way I've been doing it since I've kind of started it. But here's my portfolio, guys. And before we jump into the portfolio, I have to say a big thanks to everybody for all the support that you guys have given over the past couple days. In the last video, I mentioned about a contest that Wealthsimple Trade was doing where they're giving out $5,000 to people who refer people to Wealthsimple Trade. And Wealthsimple has made a new thing where they're letting new people and old people who've used the app in the past to punch in a referral code, and you can get $10. So if you guys are watching this video and you made an account in the past and you haven't claimed a referral from somebody, I will put my code in the description of the video. You guys can use that code and you'll get $10 for free. Even if you made an account in the past. So check that out. And if you guys are new and you want to make a new account, just click the link or use my code and you'll get $10 to sign up an account. I think you need to trade $100 worth of stocks. So if you did make an account in the past, you just use it anyways because you just get yourself a free $10, and I'll get a free $10 as well. And I appreciate that very much. And I just want to say a big thanks because after I did that video, I mean, I'm going to show you guys this in a second, but you can just see how many people use my link. Like, this was ridiculous how many of you guys went into the description of this video and used my link. And I just want to say a big thanks to everybody who supported the channel. Like, look at, like, this is crazy. Like, so many people use the link. And then you can see I got a bunch of signups here over the past week. So I just want to say thank you guys very much. I really appreciate it. You guys are awesome. You guys deserve it. So thank you very much for everybody who used my link. I really appreciate it. And if you guys have made an account in the past, just use somebody's link. Use your friend's link if you guys want. I don't really care, but just make sure you get that $10 because it's there for free. And the contest does end in 10 days. So yeah, I just want to say really big thanks, guys. I really appreciate it very much. But anyways, let's jump into the portfolio. Let's check out our dividend-based portfolio first, and then we'll check my REIT portfolio afterwards. So the dividend-based portfolio, we have $4,651 Canadian, and as you guys can see, if you guys have been following along, we're actually down. Prior to the last couple days, I think we were up about 3%. It was like 3.5%. Then the past 2 days, we are back down negative for this month. So it's kind of funny, you know, over the past little while. Stocks have been up and down, and now we're just, you know, down quite a bit. We were up about $100 or so, or something like that, and now we're only up about 0.47%, which is $20. But that's just how the market goes. If you go over the past week, we can kind of see like the big dive. Now these are deposits too, so this little spike here is like the deposits too, but you can see that like there has been a nice drop over the past couple days. So most of our stocks and our gains that we've gotten are kind of back down, but that's okay because it's a good opportunity to buy right now. And as you guys can see, a lot of these ones are kind of on the going down here, and we do have some money today, so I'm going to be buying some stocks today. I'm going to be boring today, and I'm probably just going to be buying some ETFs. We'll kind of take a peek. I'm going to take a peek at the stocks we have, and the ones that have taken the biggest drops, maybe we'll buy those. And I think that's the best way to do it. So let's take a peek at the ones we have right now. So first of all, we have Bank of Nova Scotia. I think I bought a few shares of this because I wanted to buy more Canadian banks. They're actually not doing too bad. We have 3 shares, total value of $165, and we are currently down about 0.75%. With this particular stock, and it's about 3% of my portfolio. So I do like the Canadian banks. I think they're really, really good. I've been trying to diversify and buy a couple shares, but the 2 biggest ones I've been buying into are Cibc and TD. So CM here is Cibc. This is the next one. This is probably the second one I have the most shares of. The one I kind of want to build the most into, kind of thing. We only have 2 shares right now, but the problem is it's so damn expensive, coming in at $100 Canadian. I never have enough money to buy it, you know. But it is one of the ones I definitely want to buy more of. As you can see, we've had a great return from Cibc, 11.36%, sitting at a return of $21. So really, really nice stock, and they have a great yield right now. If I had the money, I probably would be buying this right now, but we're going to have to wait till we get some more deposits. But Cibc is definitely a bank stock that's on my radar, and I'm definitely going to be buying more shares going in the future. Next one we have is Enbridge. We have about 3 shares of Enbridge. Enbridge has been doing not too shabby, but it looks like it has gone down quite a bit over the past day. if you go over the past week or so, you can see a nice little drop there. So we're sitting at, I think, about a 6 or 7% return with Enbridge, but it looks like it's kind of went down back to be about around 0%. So we could buy Enbridge today. Like I said, we're going to look at the ones, and maybe the ones that have taken the biggest hits we'll buy so we can grab them at the lowest price. And that's kind of what we're going to go with. Next up we have is Fortis, another popular Canadian company, energy-based company, utilities-based company. This is like Enbridge's sister kind of thing, if you want to put it that way. Sitting at about negative 3% return. We could buy, Fortis might be a good buy right now. We'll kind of keep that in mind, but we just have about 3 shares. So that's one we're going to look at. Next one we have is Manulife. It's a great company. They had a nice, good start to the recovery to the pandemic, but they've kind of went down a little bit and had a little bit of ups and downs, and we're kind of sitting in the negative. I remember we were sitting at like a pretty good return with them for a while, but they've kind of dipped down. So this might be a good opportunity to buy the stock right now, especially with a nice yield of 5.55%. That's a pretty good yield for a financial insurance-based company. It's kind of hard because there's so many good stocks right now that are such a good price. So I'm not too sure. Like it's kind of tricky to think about, right? I did buy a bunch of VDY shares over the past couple days, so I'm not too worried about buying ETFs. I might buy some individual stocks, but we'll have to wait and see. But if you guys want, like in this video, let me know what stocks you guys think are a good buy right now. Like share with us in the comment section of this video. It'd be cool to see. So next we have Polaris. This is one I bought a little while back. Once again, they went down quite a bit, sitting about negative 7%. And I don't know, so pretty good dive of the past little while. So this might be a good one to pick up. Next up we have is RNW, which is TransAlta Renewables. This is one of my best performing stocks, actually. I think they were sitting at about 13% return, and now we're still sitting at 10% return, which is pretty solid. And we have about 14 shares. So this is one of my better picks, and this is actually one of the ones I wanted to buy. And it did go down a little bit, so it might be a good buy, but I might buy some of the other ones that are a little bit lower still. We'll have to just wait and see. Next up we have is RY, which is another Canadian bank, Royal Bank. We have 1 share of this. I bought 1 share a little while back. Might buy some more shares in the future, but once again, they're just so expensive. It's hard to nag some of these Canadian banks. That's why I like ETFs, because you can just buy a bunch of shares of different things, and you don't have to have waste all your money for the week just on 1 share of a bank or something like that. Not that it's a waste, but it's kind of silly, but it doesn't really matter in the end. But I just next up we have is Severia Corp. Good stock for me. 8% return. Only $6 because we only have 6 shares, but this one has been performing pretty solidly, and it looks like everything across the board is down quite a bit. Next up we have is Shaw. We have 10 shares of Shaw, 2.7%. Yeah, this went down quite a bit too, actually, over the last little while. 4.7 yield, 5%. This would be a good stock to buy too. And next up we have is TD, my favorite bank stock. They went down quite a bit too, actually. We have 7 shares of TD. I think this is the one I have the most. Yeah, about $444. So this is my biggest invested Canadian bank stock. $23 in total return and about 5%, and a nice yield of about 5%. So, any one of these stocks, I think, in all honesty, would be a good buy. So we'll wait and see towards the end. I might just buy an ETF, depending on how low they are. This is VDY. This is one of the bigger Canadian-based ETFs that I have inside this portfolio. I've been buying this one regularly, and you can see it's down quite a bit. So I might even buy a couple shares of VDY just to add more to my portfolio, because I do want to increase this to about 30 to 40% kind of thing. And they have a nice good yield of 5.41. So we might buy some VDY today. I think that's what I'm going to do because I can't decide. Next up we have is VYMI. I bought this way back in the day, and I've been looking to kind of sell it. I'm just going to hold on to it till it goes up, and then once it does get to a decent price, I probably will just sell it. Next up we have is XHD. This is my Canadian Hedged US fund. We could buy this one as well. This one has kind of been up and down over the past while, and you can see a nice nosedive here, right? Just kind of went down quite a bit. So this one would be a good buy too. And I haven't bought this one for a while, so maybe I'll buy a couple shares of this. I don't know. We'll see. Maybe I'll split it between XHD and VDY and just buy some ETFs. And then we have XRE and ZWC. XRE we bought way back in the day. We'll just hold this in here until it goes up because it's negative 14% right now. You could buy, if you think XRE is going to recover, it would be a good time to buy with a 6% yield, and you could get a nice recovery. In fact, when you go over to the REIT portfolio, I probably will buy XRE, but we're not going to buy it in this portfolio. I don't even know why I have it in both portfolios. I bought it way back in the day, and I've just been meaning to get rid of it, but it's so low I don't want to sell it right now. And next up we have a ZWC, which has actually been doing pretty good with a 4.45%, so it went down a little bit too, but nice yield of 8%. So might be a good time to buy that one. Just across the board, you know, like all stocks are pretty good price right now. So I'm gonna buy 1 share of VDY, and we'll buy 1 share of XHD, and we'll see where we're at. And if we can buy anything else, we'll buy something else if we can. So we'll buy 1 share of each here. We'll go to tax-free savings account, and we'll go buy. And we have a little bit more in my TFSA for this month because I've been using my referral codes that you guys have been using. My $10 I've been getting them and sticking them in this account. So that's why this one's a little bit higher. We have a little bit more money inside my dividend-based portfolios because that's where I've been putting those awesome referral codes that you guys have been giving me. So thank you once again for that. I really appreciate that. $57. We'll buy 1 share of XHD, and we'll see where we're at. And if we have a little bit left for something, maybe we'll buy like a cheap share of like Manulife or something like that, depending on where their price is at. We'll just have to wait and see here. Wait for the order to go through. And then we have $31 left, so we could buy anything under $30. Let's see here. I think I'm going to buy a share of Manulife. That'd be a good stock to buy right now, since they are down quite a bit. Or we could buy R&W. You know, we'll buy Manulife. They went down quite a bit. I think this is a good opportunity to buy right now. So we'll buy 1 share of that. And then I don't think we'll have anything left for anything else. At least not now until we get some dividends or until I put some more money in over the next couple days or so. We'll just wait and see here. Go done. Once again, I want to just say really quickly, guys, that I do base the bulk of this portfolio in ETFs, and then I spend a little bit of the extra money on individual stocks. But the main purpose is just to buy good, solid ETFs and make money that way because it's more reliable, more stable. And who knows if I'm good at picking stocks. I did do it mostly for fun kind of thing. And if we go over the past little while, we go to the activity, we go dividends, and you guys can see here that we have quite a bit of dividends. Over the past couple of days, I've kind of been tricking in. I haven't updated the spreadsheet for September yet, so these ones aren't added in yet, of course. But you can see they're already starting to rack up for September over the past little while. They're really starting to rise up here, so that's good news for the portfolio. The next little while, we should see those dividends really start to increase, and as we invest them, that nice compound interest is starting to grow. So that's the dividend-based portfolio, guys. Let's jump into the REIT portfolio, and let's check out my Canadian real estate stocks. Okay, guys, so we're almost done the video. I'm sorry for the long video, guys, but we're approaching my real estate based portfolio. And this is a portfolio I wanted to this is more like just a testing case study kind of thing than a practical thing, but I wanted to see how much money we can make investing into strictly real estate stocks versus dividend stocks. This is my real estate portfolio, and this is mostly in Canadian real estate stocks because those are the ones I'm familiar with. And eventually, at some point in time, I do plan on sticking this into a tax-free savings account once it starts to accumulate, and that'll probably be towards the end of this year, because towards the end of this year, I'm going to kind of figure out, I'm going to be approaching my limit, and I'm going to try to figure out like what I want to actually put into my TFSA and what I don't. I'll probably keep my Wealthsimple Invest account that's already in there, and I might just stick these 2 portfolios into a TFSA and then just start new ones, and just kind of confusing, right? But unfortunately, when you hit your max, you can't really do much about it. Like, you just got to kind of make a new portfolio kind of thing. So we'll have to wait and see what's the best way to do that. But here's my REIT-based portfolio. I'm seeing about $3,434, and we are down about 0.74%. So this portfolio went down quite a bit too over the past couple days. If we go the past couple weeks, we can see like a nice big dive here, just like with our dividend stocks. So the stock market as a whole is kind of going down here, but that's okay, because remember, when the markets go down, you get things at a cheap price, and then when they rebound, like it kind of happened after the stock market crash, you get nice returns. So look at this as an opportunity to buy stocks at a cheap price, and then when they rebound, in a couple days, in a couple weeks, in a couple months, in a year, whenever that happens kind of thing, or even along the way kind of thing, you'll start to get those earnings and stuff like that. So look at this as an opportunity to buy some stocks that you could have bought a couple months ago, but they went up in price. But now they're back low again. So look at that as an opportunity. Next up, we have the first stock we're going to talk about here. Once again, this portfolio is mostly in ETFs, but I did buy some individual REIT-based stocks here. My first one is Brookfield Property Partners. This one is doing quite well, but over the past couple of days, it really went down. And you can see they're sitting at, I don't know if that's accurate, 14% yield. If that is accurate, that's pretty insane. So I don't know. Like, some of these companies, they're kind of high risk. I'd be really, really careful about investing in individual companies or putting a lot of money in them unless they're doing really well. You know, you've really done your research and stuff like that. Otherwise, I would say just stick to ETFs when it comes to REITs because they're really risky right now. I mean, obviously the payoff down the road could be huge, right? But they've taken some big hits here. Next up, we have is Dream Industrial REIT. This is a new one I added in my portfolio recently. Say at -3%, so not too shabby, with a nice yield of 6.37, and we have about 4 shares in our portfolio, so that one's not doing too bad. Next up we have is one I actually have a lot of shares in, and this is H&R Reit. I've been investing into this one over the past year, and it's actually doing pretty good. We're sitting at 43 shares, 6% return, and 10% yield. Once again, that might not be 100% accurate. There's a delay and stuff like that with Wealthsimple trade, and some of their totals aren't 100% accurate, so just double check that on Google or something like that. If you guys want to see, but this is a stock. Reit has done pretty good for me over the past while, and they do have a nice monthly dividend yield. Even though they've cut their dividend, they're still doing pretty good. That's the nice thing about high dividend stocks is that even if they're good companies and they're good solid companies, even if they do cut, if you buy them at the cheaper prices when they have the high yield, if they cut it a little bit, it's not that big of a deal because you still bought it at a nice good yield, and over time that's going to keep growing and compounding. Next up we have is RioCan, probably one of the biggest Canadian-based ETFs. We have 38 shares of RioCan, sitting at about -2.83%, so down a little bit, and once again a pretty high yield here. This is one I think that's probably going to, if there's any REIT that's going to do well, it's probably going to be RioCan, but it's probably going to take a while because you know, you got to get that yield to work its magic, and you got to keep investing into. I'm going to be investing into RioCan still, but we'll just have to wait and see. But I think it's one of the safer bets. Next up we have is Reit. We have 14 shares with them. We've been investing into this one over the past while since we started this portfolio. We have about 4% return with them. And then we have XRE here, which is probably the one we're going to be buying today. We have a couple shares here, and we're in -6% in this portfolio is XRE, and a nice yield of 6.28%. So I'm going to probably buy some more XRE. I've been stacking up on XRE because they've been down quite a bit. It's one of the ETFs that took in the biggest hits, so I'm kind of making more of an aggressive play by investing with them. And over time, when they recover, we should see some nice gains from that. And they do have a monthly dividend, so that's very nice as well. And then we have ZRE, which is also one down about -4%. So they went down quite a bit too. Actually, everything across the board is down quite a bit. So VRE and XRE are the two big ones I have inside this portfolio. I think we're going to buy XRE today because I think I bought VRE recently. So we'll go to XRE. I think we have about $54, so we could spend maybe 2 shares. We'll buy 2 shares of XRE. We'll see where that put us at, and maybe we could pick up something cheap with the little extra bit of money we have. We'll just confirm this order and go through. And then after we'll confirm this order, guys, I will go over to my investing spreadsheet once again, and I'm going to show you guys my monthly dividends for my REIT stocks because I have been tracking that as well. Just show you guys a quick little update on how this portfolio has grown over time. So we have $25 to trade. So let's see what we have here. Might pick up some more H&R. I think that's I'm still going to keep buying into them because they've just been doing so well for me. We'll buy one more share of H&R, I think, and now we might be able to buy 2 shares actually. Let's go back because it is $10. We'll buy 2 shares, and that should go through. Yep. So we buy 2 shares of H&R REIT, and add that to a portfolio with the main shares going into XRE. And I will show you my dividends from this portfolio in just a second. Go done here, and we'll go activity. As soon as this thing loads, a little bit slow sometimes. Go to activity, we'll go filter, personal account, and then dividends. And you guys can see like the actual dividends from this portfolio we got. So $1.95, $1.80, $1.74, $4 from RioCan, nice good dividend. And most of these pay monthly dividends, so it's really nice. And then if I go into my spreadsheet here and I move over a little bit, you guys can see that this is my REIT-based portfolio. I kind of track the dividends on here as well. So once again, you know, it's been slowly growing. And in August, we made $11 from our REIT-based portfolio. And September should be maybe a little bit more than that. We might, like I said, we might see $20. We'll have to wait and see. But anyways, guys, I just want to wrap up this video because it is getting pretty long. I hope you guys enjoyed this portfolio deep dive. I know I don't have like the most flashiest videos or the most good production value, but I want to be transparent with you guys, and I want to show you guys like my actual results I've gotten from these portfolios. So once again, let me know what you guys think in the comment section of this video. If you guys did enjoy this video, please give it a big thumbs up. And if you guys want to see more Canadian-based content, be sure to subscribe to the channel because I do post these updates quite a bit, and I do update my dividend investing case study on a weekly basis. So yeah, subscribe to the channel if you guys want more videos, and hope you guys enjoyed this video. Let me know what you think in the comments, and I'll see you guys later.